AT&T had increased its dividend for 36 straight years, when in 2021 it shocked investors, cutting its dividend in half. The bellwether stock paying a 9% dividend yield was a Dividend Aristocrat with investors' trust. Hey Bowtie Nation, Joseph Hogue here, and as a lifelong dividend investor, I can tell you that AT&T cutting its dividend was like finding out Santa Claus isn't real again, except this time, Santa also took half the cookies and left a bill. But there is a group of dividend stocks you can trust, the Dividend Kings. These cash flow royalty pay a 3% dividend, with some of the 54 companies paying 9% yields, and all with more than 50 years of dividend increases. But just one stock stands out above the rest, one king to rule them all. I'm counting down to the 5 best dividend stocks within the King's list, 5 stocks with the most dependable cash flow in the market, the highest dividend yields, the ones you can trust. Stick around and I'll compare the Dividend Kings against the Dividend Aristocrats and show you why the Kings rule. Our first Dividend King, United Bankshares, ticker UBSI, may be the lowest yield at 3.5%, but it's the one I'm most excited about for upside return, and you can see the start of that in this 16% jump post-election. The potential for fewer regulations and limitations on banking could mean the biggest growth era for the industry since the 90s, and regional banks like United are going to benefit just as well as the big banks. UBSI has over 200 branches concentrated in the mid-Atlantic states, including Washington, D.C., where it's the largest regional bank. United is a solid regional bank and never saw the kind of deposit flight that we saw in those West Coast banks during that crisis. It also isn't heavily leveraged to commercial real estate, which has helped it over the past year as well. Now, with all banks, one of the most important metrics is this net interest income and its margin. The margin here is the difference between what the bank pays out as interest to its depositors and then the rate it collects on its loans, so its profitability. And the NII is the total interest it collects. You can see here, UBSI has done a great job of keeping both of these consistent, even as those other banks have seen their metrics weaken. And that kind of management has helped United increase its dividend for 50 straight years, just making that list of Dividend Kings. And now with the Piedmont merger just at the right time, the bank is setting up to continue growing and growing that payout. We're just getting started, but I want to introduce you to this dividend royalty stocks, explain the pros and cons of this type of strategy, and how the Dividend Kings are different from the Dividend Aristocrats. The Dividend Kings are any company that has not only paid a dividend, but has increased it for more than 50 consecutive years. The Dividend Kings are the only royalty that doesn't rely on scandals to stay relevant. Over 50 years of higher dividends and not a single tabloid headline. In fact, there are only 54 stocks that meet this criteria, a select few with the commitment to shareholder cash return. Of course, the upside to this is that confidence that you're going to continue to see that dividend grow, even when the rest of the market gets mauled by the bear. But now you know what we say, it's not all rainbows and unicorns. The downside to that royal status and dividend growth is that these companies tend to focus on that dividend payment at the expense of stock price. Now, part of it is just a function of these industries the companies are in. If tech stocks like Nvidia are the new kids on the block, rocking a Mustang doing 70, then the Dividend Kings are closer to Grandpa driving 20 in his Corolla. Many of these 100-year-old plus companies that dominate their industry, but that industry just isn't growing more than 2 or 3% a year. That means the Dividend Kings probably won't make you rich, but they will make you a stress-free portfolio that pays the bills. Back to our Kings list, but stick around and I'll show you why I trust the Kings over the Dividend Aristocrats. And next on our list is Black Hills Corporation, ticker BKH, with its 4.1% dividend yield. Black Hills is a regulated utility serving 1.3 million customers across the Midwest in electricity and natural gas, and what was once a low or no-growth industry is now booming with demand from data centers. BKH expects new data center demand to add 5% growth to the current earnings and up to 10% by 2028. That's going to help it supercharge its dividend growth, already growing at 5% a year, and having grown that payout for 54 straight years. So that dependability is there, and now the growth is contributing to a 31% pop in the stock over the last year. I'm highlighting some of the most dependable dividend stocks in today's video, but another way I've been getting that cash flow is through the Arrived Homes platform. The platform packages rental real estate as LLCs, so you get a direct investment for less than $100, and without the massive down payment or management headaches you get from real estate rentals. You earn dividends on rental income, and Arrived has recently transitioned to monthly dividend payments, so you're earning from 3 to 8% annualized and getting that cash flow every month, along with the price appreciation when the property is sold. This is one of my favorite investments right now, but I know you've got a lot of questions. I know I did before I started investing, so I'm going to link in the description to the platform. One thing, the homes available for investments sell out fast, so make sure you click through and get on their notification list. The best record on the Dividend Kings list goes to Northwest Natural Holdings, ticker NWN, with its 68 years of increasing dividend payments and a yield of 4.75%, which is also one of the strongest. Northwest has over 165 years as a regulated utility, serving more than 2 million customers in Oregon and Washington through natural gas, renewables, and water. Now, I love the business model here because it's got that regulated monopoly for safe cash flow, plus the upside to the incremental earnings on the renewables and the gas pipeline asset. Now, that regulated market means Northwest has been able to increase its dividend for 68 straight years, growing the payout by 2.7% over the past 5 years, and we could see that number increase with that growth in earnings for utilities. And with that kind of history, 68 years of higher dividends, Northwest Natural is going to outlast the gas stoves that we're not allowed to own anymore. Now here, I have to give an honorable mention to Genuine Parts, ticker GPC, also tied with Northwest at 68 years of increasing dividend payments. The shares pay out a lower 3.2% dividend, so they didn't make the list, but with the recent sell-off, are more attractive on a valuation right now. GPC is a leading parts supplier to industrial and automotive customers. Lagging industrial production for much of the year has really slowed revenue growth, but could pick up next year. And not only has the company increased its dividend for 68 years, but it's also bought back over 112 million shares this year, so even as it waits for that earnings recovery, that dividend increase is safe. We've got two of the highest yielding kings coming up next, but what about the Dividend Aristocrats, the more popular dividend growers list? The Dividend Aristocrats are those companies with 25 plus years of increasing the dividend payment, so you're going to see some of the overlap in these two lists, like 3M and Altria Group. The big difference, though, is that the Aristocrats, since it's a copyright of Standard & Poor's, it's only those companies in the S&P 500 index. That means there are companies in the Dividend Kings list that are not on the Aristocrats list, like Canadian Utilities and ABM Industries. Now, if we're talking about dividend security for a bulletproof portfolio, then I gotta prefer the Dividend Kings. For a stock price return, you might go with some Aristocrats since there are some newer companies in that list, or you could just always pick the best stocks from both lists. Back to our list, and if that 6% dividend isn't enough for you to invest in a tobacco producer like Universal Corporation, ticker UVV, stick around and I'll give you an alternative. Universal is a leading global supplier of leaf tobacco, producing nearly 2/3 of all tobacco outside of China, with business in 30 countries. Diversifying from the industry, though, it started to build out a plant-based ingredients platform with acquisitions from Fruit Smart and Silva in 2020 and Shank's Extracts in 2021. So then that tobacco leaf segment produces those stable cash flows that are being used to add in the plant-based segment to produce growth for the company. Universal has grown that dividend for 53 consecutive years, growing it by 6.7% over the past 5. And while that transition into plant-based ingredients may seem a little odd, like seeing a chain smoker suddenly start eating kale, it's worked out so far. Now, an alternative stock, though at a slightly lower yield, would be Federal Realty, ticker FRT, with its 3.8% dividend yield. While it is a lower dividend, this one could have more growth as a real estate investment trust, serving 9 strategic locations in retail, residential, office, and hotel properties. And we see some of that upside potential in the 15% jump since July, with the promise of lower interest rates propping up the real estate market. Federal Realty has increased its dividend for 57 consecutive years, the longest among real estate trusts, and is ready to keep on going. I'll reveal the one true king next, the best dividend stock among the kings list, but with stock prices so high, I'm being extremely cautious about what I buy lately. In fact, this month, I'm only buying one new dividend stock for my portfolio. If you want to see which one that is and the 4 others I'm watching, check out this video next. I'll show you the full list of 54 Dividend Kings next, but there is no alternative to Altria Group, ticker MO, with one of the highest yields at 7.4% and a 38% return over the last year. The owner of the Marlboro brand in the United States is facing rates of double-digit declines in cigarette volumes, but is aggressively taking market share in that smoke-free segments to make up the difference, seeing a 20% increase in its Enjoy product volumes just over the last year. Strength in its brands and marketing has also helped it grab a full percent market share in cigarettes over the last year, cushioning that decline in volume. And here, Altria also owns a 10% stake in beer maker Anheuser-Busch, worth $10 billion for some serious cash flow. All this has helped the company keep revenue flat and drive a 3.7% pace of earnings growth on profitability. That's helped it grow the dividend by 3.1% a year over the last 5, and has increased its payout for 54 consecutive years, cementing that Dividend King royalty status. Here's the full list of 54 Dividend Kings. I've noted the number of years dividend increases, the sector, and the dividend yield, and what I want to focus on here isn't that yield, but the sector instead. I highlighted some of the best Dividend Kings in this video, but more important, if you want a bulletproof portfolio, is to make sure you have stocks across different sectors, so that any big macro events happen to weigh on a particular sector of the economy, you're not caught with all your stocks in that one sector. Now, you're obviously limited to what sectors you can buy here because only 5 of the 11 stock sectors are really represented, but there's still some great companies here like Target, Con Ed, and Coca-Cola. Now, the tech sector and most of the stocks in the communication services sector weren't around 50 years ago, and they sure as hell weren't paying dividends. So you might pair your dividend stocks with a tech ETF, like my favorite, the iShares Expanded Tech Sector, ticker IGM, which gives you exposure to that growth and that tech theme. Get dividends on rental property up to 8% plus the upside return on arrived homes. But make sure you get on that notification list with the invite link below. Or click on the video to the right for the one dividend stock I'm buying this month. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.